Hey everyone, most founders treat taxes as an inevitable money out item on their taxes, but the tax reduction is actually the cheapest capital that you will ever find to fuel your growth. What do I mean by that? Most of you are probably paying way more in tax than you need to. You just don't know it. I'm Doug C. Brown, and today Peter Holtz, my guest, is going to reveal to you why your current CPA might be a historian costing you hundreds of thousands of dollars in hidden leaks. We're going to look through the windshield at strategies that saved one owner $435,000 in a year and how you can deploy such strategies in your business. So let's stop the bleed. Peter, welcome to the CEO Sales Strategies Podcast.
Thank you so much. It's a pleasure to be here.
So, Peter, you are in the sunny state of California, correct?
Correct. Yeah. We have offices up and down California and also one in Massachusetts, Boston, Mass. We serve people across the country.
Boston, Mass, man, that's my
Your
college
backyard,
town.
isn't it?
Yeah,
Yeah.
yeah, that's my college town. So welcome. Let's talk about, a lot of people, like I always say, business is so simple until you add people.
Mhm.
It's really money in, money out
Mhm.
equals a result. That result could be loss, break even, profit, right?
Right.
How do taxes act as a massive, I would say, often unoptimized money out line on the tax item that, kills that growth momentum, if you will?
Yeah, it's rough because a lot of times people are way overpaying on their taxes, and the reason they are is the industry, the CPA slash tax preparer industry. Most people that prepare taxes for a living, and there's 1.2 million people licensed in the United States to prepare taxes, are box fillers. They put your numbers in the boxes, whether those numbers are right or whether those numbers are wrong. They'll put them in the boxes. They'll produce the return. They'll tell you how much to pay and when to pay, and they won't think about how I can save money. And they won't think about whether or not the numbers are actually accurate. So people generally overpay. And in fact, we when we go through everything we go through, all the loopholes, all the strategies, and all the accuracy checks that we go through, typically our average savings are 40% reduction in taxes.
Did you say 40%?
I did say 40%, yes, because people don't, and one of the problems that a lot of these tax preparers, and I'll call them box fillers, is probably the best term I can use for them. They'll typically tell you, if you ask them a question, and a lot of business owners are really frustrated, they say, I go to my tax guy and I start asking about strategies, and they say no, right? They don't tell you how you can write it off. They say, no, you can't, because they don't want to work. A lot of these box fillers want to work between January 31st and April 15th, a couple months off, come back to work in August, September to do the extensions, and they're done, right? That's their kind of life they want to lead, right? And as a result, they're not really thinking about year-round tax planning, which is critical, advising people what to invest in. And we really believe in what I call the business wealth cycle, which is understanding your numbers, making sure they're accurate, minimizing your taxes, and imagine saving 40% of those taxes and keeping that money in your business that you can turn around and reinvest in the parts of those businesses that are making you much money to create more profits that you can invest and build your life in other areas, right? So when you really think about doing that year after year after year, you create an upward wealth spiral, is really what you create, and creating more and more wealth and keeping as much away from the government as possible.
Yeah, legally, right? I mean, we're not
Yeah,
talking
legally.
about any
No,
black hat methods here. We're
no.
talking,
I mean, there's so many loopholes in the current law, and they get better all the time. I mean, the big beautiful bill had 100% bonus depreciation on a lot of equipment. Also, if you're in your manufacturing sector and you build a new plant, you can write off that entire building in 1 year, believe it or not, which is just amazing. And I have some clients that are working on doing that. So many different loopholes, Augusta rule, paying your kids, making sure you can write off your vehicles, all the other structures that you can use to justify um, your expenses and your write-offs, you know, just produce tremendous results.
so I'm gonna act like somebody listening to this who's never done the strategies that you're talking about, because I know some of the strategy, we've deployed some strategies. The first one you brought forth, writing the building off, like was like, wow, okay. Um, and I can say they work, but I'm
Mhm.
going to listen. I'm going to say I'm a person listening here and going, yeah, but the IRS, man, they're going to come after me, aren't they? And like, we all know that uh, the IRS is not a really friendly organization, and they make people's life hell when they and I can say this from personal experience. They showed up on my door one day and said, "Hey, you owe us 350 grand,"
Oh my God.
and and that I don't know why they did this, Peter, but when they showed up, literally they showed up and said, "You owe us 350 grand in taxes." But if you settle right now for $110,000, we'll write off the other side of the thing. Like we literally settled right here in your doorstep for $110,000 if you want to write a check. And in my brain, I went, if you just drop like that, you don't have what you
You
think you
don't
have.
really believe, you don't believe your own stuff is
Yeah,
really
exactly.
like, the good news is the Internal Revenue Service is governed by the Constitution of the United States, which is the guarantee of due process to all of us.
Yes.
And anytime somebody comes to you and the IRS comes to you with a bill, you have the right to appeal that bill. You have the right to challenge the bill with the auditor, the audit supervisor, go to appeals, and you have the right to go to tax court. In the United States of America, there are 19 tax court judges. There are 25,000 cases filed every year, and 2,000 are heard. The rest of them are negotiated.
Yep.
Okay. So, tax is a matter of law and it's a matter of evidence, right? And what evidence? They did that because they knew they didn't have the evidence, right, to justify what you were talking about, right? And I don't know how that worked out, but I mean, that's something you're like, you got to keep on fighting because if they were down to 110, they're probably really willing to go down much further than that,
Oh
right?
yeah, yeah. I mean, at the end, it took 7 years to get through this whole process, right? But at the end, they actually owed me $19,000. And but it cost me $125,000 in attorney fees to actually get there, right? So I guess from a business perspective, maybe writing the 110 off would have just been easier. But the but the point is for me, I knew I didn't do anything wrong. And what they were looking through, and this is the bookkeeper had misclassified a few things and they picked up on a few easy things. And like most driving entrepreneurs at the time, I didn't know the tax codes the way that the CPA knew them or whatever. There were
Yeah.
just some oversights that happened on the bookkeeper and the CPA side. Um, and I figured, hey, we're good. But, that's what I tell people all the time. You've got to make sure your documentation is in order when they ask me what happened, because they had actually classified my housekeeper at the time, person who would come and clean the house, and they put it under technology services. And that was
Oh
like
my
a glaring thing. And they caught that and then they just kept going. Right. So I,
God.
but the reason I bring this up is because of a listener listening to this. I want you to hear the story of what Peter's really saying. You have money sitting in your taxes that you are likely have paid for a long time, money out that you haven't had to pay out legally. You haven't had to pay out, but you're not aware of the tax code. And who would be besides somebody like you, Peter, who's studying this every moment, because it changes all the time too, as things go on. And you're going to take that money which you're giving away, and now you're going to take that money and reinvest it in wealth creation. So it's not like you're pulling new money out of your pocket to do this. You're just taking that which Peter is an expert in, and people who are experts in can take that and then redeploy that cash. It's no different than what I tell you all. Like you have hidden revenue and margins sitting in your business. You've already paid for them. You just haven't moved the money to the bank account, usually, 15 to 25%. So I want you all to kind of like open the ears, if you will, and just hear what's going. I've been through this personally, and I can tell you that it does work if you are willing to work with it. And as you said, I think you said they were like, I'll call them pencil pushers, book
Right.
pushers, right? Here's what I found with most CPAs. Most CPAs are doing taxes for compliance purposes,
Exactly. Exactly.
right? They focus in the rear view mirror, if you will, history, compliance.
Right.
And what I'm hearing you say is we're focusing, yes, on compliance, but we're also focusing on the windshield, the planning, the reduction.
Can do better going forward, and making sure, and it's really the number one way we help people save money on taxes is accuracy.
Ah,
Accuracy is really accuracy and structure. I mean, I was on the phone this morning with somebody who's going to make 5 million bucks this year as an S corp.
yep,
Just flipping to a C corp is going to save him 700K,
yep.
right? And then recreating his structure and starting to invest in depreciable assets in real estate. He's in the real estate business anyway. So starting to invest in more real estate and pulling that depreciation, because he's looking at several years going down the road of really great earnings. And like we're just strategizing with him on what we need to do and how we need to invest to try to maximize his tax savings. And I mean, let me give you another good example. I have an airline pilot that's a client of mine, right? That has a W-2. And um, the IRS thinks he's a full-time worker. Well, unfortunately, according to federal law for the IRS, it's a 20-hour week job. They cannot fly more than 20 hours a week, right? So all the time he's on layover, he's doing his real estate. So we made him a real estate professional status. He goes out and buys real estate, takes an appreciation against his W-2, and he gets all his money back. And then he takes that money, which could be 100K or whatever, and he reinvests in his next piece of real estate. So he's continuing to build wealth for himself, exactly what you're talking about, over the long term by being a real estate professional when you wouldn't think he should be a real estate professional.
And everything you're reinvesting, folks, can be reinvested toward that wealth building asset.
Right.
Yeah, and sometimes if you have your own business, you can just reinvest parts of that back into the business for additional growth, right? So, I mean, if you think about it, if you saved $100,000, just $100,000 a year on taxes, like, if you're a big enough company, that's not that hard to do.
Right.
And you've been thinking, I need to hire more salespeople.
Yeah.
There's your money. Right?
Right.
And so essentially, you're funding yourself with your own internal money that you're actually paying out today. And this is what I want you to get the concept of whether, you're like, oh no, does this really work? Yeah, it does. I mean, it's the same concept of what we deploy on the revenue margin side of the business. It's the money outside we're talking about here, and taxes are going to be a big money out. And what is the old adage, Peter? You can't avoid death and taxes or something like that, right? But you can avoid, dying too early.
Yes,
Take care of
exactly.
your
And
health.
paying too much. Exactly.
And you can
Exactly.
and you can do
Yeah.
the same on your taxes.
Yeah. You could smoke, 3 cartons of cigarettes every day and drink four gallons of alcohol every day, and you're not going to live as long as if you just have the discipline, right? And the
Yes.
tax is the same side. If you have the discipline and the documentation and everything else like that, and you do some planning and a little bit of or that organization and discipline, you can reduce your taxes significantly.
And you're talking a guy who's making $5 million, but you're also talking an airline pilot who I assume's not making $5 million.
Right.
Like, because if they are, I need to go get my pilot's license.
Yeah. So
So,
I mean, the typical W-2 for airline pilots in the 300K to 400K range, right?
right.
So, and I actually talked to another airline pilot this week and explained that strategy to him, and he was blown away because he's got a huge W-2 that he's concerned about.
Yeah. So all of you who are on W-2 listening to this, remember you're likely in the highest tax bracket of anyone.
Yeah.
Because your taxes come out before. I mean, they come out before. And so there's ways of structuring it. And if you're doing $5 million a year, like you said, you move from an S corp to a C corp, you change the tax structure. There's also some liability protection in doing that, is there not?
There is a little bit more liability protection as a C Corp for sure. Harder to pierce the corporate veil, different ownership structures. Yeah.
Well, the reason I bring that up is because I had a C Corp, had an S Corp at that time, and they shifted a lot of burden to the C Corp
Yeah.
during
Yeah.
so folks, the way you're structured sometimes will give you massive tax advantages, but it also gives you liability protection. And if those of you who listen, and if you're a DBA and you're running as a DBA, you don't have much protection at all, if any. So, this is not difficult stuff to understand once you start to understand it. There are things in our tax codes today that are legal things put in the tax code that people who understand them take advantage of, and people who do not take advantage of. I think Warren Buffett said at one point, he's like, I pay less percentage in tax than my secretary or something like that, right?
Yeah.
And so now walk me through something here. You've been doing this for 40 years, if I remember correctly.
That's correct. Yes.
Right? You built a $13 million firm, if I remember correctly on the numbers. I want to know, what's the biggest tax leak that you see in a successful business, if there
Man,
is one?
I, you know, people not believing that they can write something up, right? I will have people that use their vehicle for business every day. I ran into a dentist with a dental surgeon with multiple offices. And he's like, my CPA told me once I couldn't write off my car. I said, how do you get from office to office to office? Of course, you can take some reductions for your car. People not believing that they can write things off when they can. Um, and then the other big one is really the accuracy. I've seen tax returns submitted to the Internal Revenue Service that's an operating business that has no assets, and that's just impossible, right? Whatever business you have to have computers, desks, whatever. I've seen gas stations with no assets, like or automobile shops, and they never took the assets for that was another good one, an automobile shop, and they have lifts and they got tools and they got all this high-tech equipment. There's nothing on the balance sheet, right? So they've never taken depreciation on that. They've never written those assets off that they're entitled to write off. Accuracy is number one. Number two is structure. People pushing millions of dollars of income through an S corporation to their personal return and incurring 37% federal, and in some states 10, 12, 13% state taxes. You could easily get to 48, 50% tax rates if you're in the wrong state.
So when you move somebody from that to a C Corp and they're paying 15% versus.
It's 21%, right? So it's
Right.
37 versus 21%, right?
Yeah.
And it takes a little bit more discipline to manage the C Corp, right? And it's also, you want to make sure you're paying your personal, you don't want to commingle, right? That's another problem that the IRS sees when you commingle your money. Pay your personal expenses out of your personal bank account, business expenses out of the business bank account. Have that discipline, right? Your groceries, your home mortgage, your personal entertainment, your personal support, right? Your clothing or whatever, unless it's logo wear. Logo wear is a business expense, right?
Yep.
So all of that stuff needs to come out of your personal. But so much more of everything that you do as a business owner is really business expenses and should be taken as business expenses.
Folks, I want you to write this down. Never commingle your money.
Absolutely.
Never. If you find you're ever writing a check that you're not supposed to, or using a credit card you're not supposed to because you're commingling the business and personal assets, smack yourself in the hand as hard as you can, because remember, this is what opened me up to liability. They coded my housekeeper in a technology business place. And it was like, when I looked at it, I'm like, what? Why? Like, this doesn't make any sense. Well, it won't make sense to the IRS, but that will open up enough door for them to start,
That's
walking through.
exactly. Don't open the door for them to walk through, right? And because they'll make themselves at home in your life for a while. Because if they think that you're hiding stuff on purpose, even though it may be just accidental, then they're just going to be like, okay, what else? What else did you do? And then it's like, then they spend lots and lots of time in your life, and you don't want that. I mean, the audit is always something that is you can contest again at the agent level, at the supervisor level, go to appeals, go to tax court, and fight it all the way through. Especially if they're wrong. I mean, if you made a mistake and they're right, they're right. You make your deal. But if they're wrong, you got to fight it all the way, tooth and nail.
And here's the thing about fighting it, because I can tell you because I have, right? And even though we prevailed, there are certain things that they don't write off, like interest.
Yeah.
As they're accruing fees and interest, you're going to pay the interest no matter how long it takes. They don't take that off.
Exactly. The
Right?
only good news for you is that you got it down to where they owed you money, right?
Yeah,
So
right.
all the interest and penalties went away because there wasn't anything for you to pay.
Right. But the thing is that the game is stacked against you and I think you gave so sage advice here, accuracy and structure, right? So it's accuracy number one. And I can't tell, I mean, I have been, looking through some tax, just P&Ls recently. And I'm like, why is this an OPEX versus cost of goods, right? Just little simple things like this. And the bookkeeper doesn't always understand. The CPA seems to not always understand, and they push these numbers through.
Right.
And so what ends up happening is it's not the CPA or the bookkeeper that goes through the pain, folks. It's you. So, but if you're talking about this, just reducing your taxes and keeping sanity and then being able to reinvest that money back into a growth engine, I mean, this is Warren Buffett's formula for compounding interest over a long period of time, right? So, so
you're right. Long term, it's thinking long term, and one of the things in accuracy, you also need to look at accuracy within a lens of understanding your business. Like your accountant, your CPA should be able to ask you questions about your business that make sense. Like I said, a retail store business is very different from an online marketer, right? Is very different from a trucking company.
right.
Each company has different numbers that they typically run, and each company has typical ways of reporting their P&Ls. And you made a great point on cost of goods sold versus operating expenses, and lining up alongside with all the other companies in your SIC code, right? And the IRS has the capability of looking at those numbers and seeing if you're way out of whack, if you don't do it right, right? So if you don't have it on the right lines, a great example is if you don't have something on line 7 for officers' compensation on an S corporation, you're exposing yourself, especially if you make money in that S corporation.
Yeah.
You're going to be saying you didn't take reasonable compensation for service to that business as an officer, right? So there's stuff that you need to be aware of, and understanding your business is one of the critical elements. And you can tell that if people are asking you questions.
Yeah, I just had he owned an $8 million company, and it was an HVAC company actually. And he wanted to start something within the company for a nonprofit division of the company. And when he talked to a CPA, they're like, you can't do this. And then then he talked to a different CPA friend of ours, and they were like, of course you can do this. And this will save you $435,000 on, just making the move from point A to point B. So,
Yeah.
folks, the point I want you to get across on this whole conversation we're having with Peter is you are likely spending more money out than you need to on that process. And you don't have to fear the IRS. The IRS typically is looking, from my perspective, they're looking for gross inaccuracies right out of the gate. Right. And so you don't have to fear the audit. If your books are in order, they're just going to come in there and they're going to look at them. They're going to go, oh, yeah, everything's in order. Hey, have a great day.
I had one of my largest clients get an audit from the IRS, and they walked in. They walked in the first day, and I said, I don't know why you're here. There's no taxes here, right? I told them that. They invest in trucks, which is 100% bonus depreciation and everything else like that. There's no taxes here. So we started going through the process. They started reconciling everything, and about 2 months in, the lead auditor called me and said, I've been given another assignment, okay? And I'm gonna have this other person who's a brand new hire take over,
Yeah.
right? Because you know what happened? They realized there was no money there.
Right.
This seasoned auditor that was there 20 years is like, I'm off to go find some money for the government, and I'm
Right.
going to stick the new guy to tighten this thing up. And guess what? We never heard from the new guy. It was,
Yeah. This is a question. This is a personal question I want to know because these things happened while we were going through the 7 years, right?
yeah,
And and what I started thinking, because I was in the military for 12 years, and what I was starting to think was, okay, on the back end of this, I imagine there are bosses going to these individuals within the IRS going, why are you spending so much time on this and there's no return?
exactly.
Is that what happens on the back
That's
end?
exact. How do you think these people get promoted? How do you they get promoted when they find money for the government? When the IRS and the audit division in particular goes before Congress, they are put on the hot seat for how much money did you get for us? Congress is asking them questions. Well, okay, how many people did you audit? How much money did you get? It's all about finding money, right?
So it's the same formula they use: money in, money out equals.
Exactly.
It,
Exactly. The audit division of the IRS is supposed to be a for-profit business, right?
yes.
And like back when man, I don't one of the president, it was a I think it could have been Bill Clinton or they said, oh, we're going to audit everybody who makes over $200,000 a year, right?
Yes.
And I think it was back in the 90s. So it could have been Bill Clinton. It could have been, you know, it was a Democratic president. But we're going to audit everybody who's over $200,000 a year. And they ended up auditing people under $200,000 a year because there was better returns. One of the reasons they look at more sole proprietorships than anything else, 4.7%, is because they know a lot of the sole proprietorships are unsophisticated. They never save their paperwork. And the IRS literally audits people today the same way they did 100 years ago. Show me the receipts and the canceled checks that add up to the numbers on your tax return. And if you don't have them, I'm sorry, we can't allow that deduction.
Yeah.
You owe us money.
You owe us money. We're going to fine you. We're going to,
And they go after sole proprietorships because there's the income tax, the self-employment tax, plus penalties and interest on everything.
yeah.
If they find a mistake on a sole proprietorship, it's not unusual for them to get 50-60% of that mistake.
Yeah. Yeah, exactly. Because they're adding on these fees and interest back due. And so, folks, those of you who are sole proprietors, well, all of you listening, please take very clear understanding. We're not saying that you're not doing something right. We're saying there are things you just don't know about and you have hidden value there.
Yep.
And that if you don't have the accuracy and you don't have the right structure, then firstly, the accuracy is going to land you in a bad place.
Yeah.
Because it's when at that point. But if you're not also set up with the right structure, you could still have the accuracy, but spending out way too much money than you need to. So, talk to somebody who knows. And you would be surprised. I literally did this when my father had a electric machinery repair company, an industrial machinery repair company. And I don't know why I did this, Peter, but I was like 19 years old and my dad filed his taxes. And I took the taxes and I went to another CPA and I said, would you go through all of this? Like, I didn't tell him we already got the taxes done. And there was a huge discrepancy between the two CPAs.
Yeah. Yeah.
I was like, wait a minute, guys, this is like an extra 50 grand, between the two CPAs. Now, this was back in 1980 when the $50,000 wasn't just $50,000.
Yeah.
So, I think it's like, to me, that's when I started realizing, okay, you know what? This has some variability to it. And, when I went back to CPA 1 and I said, well, what's going on? He said, well, I filed this the way it was supposed to be filed. And I said, well, why is CPA filing this the other way? And he literally said, I don't know.
Yeah.
And I'm like, Okay, is this legal?
So,
Yeah.
in the United States, I said there's 1.2 million people licensed to prepare taxes for the IRS.
Yes.
1,100 of us are certified tax planners. Okay. So 1,100 people out of 1.2 million have spent additional time and study to try to figure out how to properly plan taxes and how to find all the loopholes.
Yeah.
And that is so basically 99.93% of current people
Yeah.
like their taxes don't care. And their answer is going to be, I don't know. Or their answer is going to, what his answer should have been was, wow, that's huge. Let me go line by line and figure out what happened.
Right.
Right. But instead they say, I don't know, because that was your compliance guy. That was your box filler. That was your guy that numbers and boxes. We don't care if they're right or wrong, but there's going to be numbers in every box.
Yeah. Yeah. And that's exactly what happened. And we promptly let him go that year.
Yeah, and it happens all the time. Like this, the guy I was talking about this morning too. He's a real estate professional, and they took some of his losses and called them unallowed losses because they're losses on real estate. Real estate professionals are exempt from the unallowed losses on real estate rule, and it's like that is obvious. The guy preparing the taxes didn't understand that all this guy does is real estate.
Right.
Crazy, man. I don't. So I'm like, it's mind blowing. But there were numbers in every box. So
Well, folks, if this,
so there's right numbers, but
if this conversation hasn't like brought your eyebrows up a bit, or maybe even shaken you a bit, that's, you're probably asleep, really. I mean, the reality is you have money sitting there.
yeah.
You can find this money. It doesn't cost you more to find this money, but when you get it back, you'll have way more money to work with, and it's legally your money. And Peter, I'm so grateful you came on here and you just kind of opened up and didn't hold back. So I appreciate that so much. Where can people find you, learn more about you, the company, in case they want to reach out to you?
Really, our website, peterholtzcpa.com, is probably the best way to do that, and reach out to us that way is the best way to do it.
All right. And folks, that's PeterHoltz .com.
CPA.com.
CPA, sorry, CPA.com. And, if you're interested in talking to Peter or talking to people at his company, just reach right out to there. Peter, thanks so much for being here on the CEO Sales Strategies podcast. And really, thanks for bringing the A++ game to this conversation. Very grateful.
Appreciate it. Appreciate it.
All right. Well, that was fun, huh? Now, listen, if you don't think of it as anything else, Peter and I were talking, and we had a great analogy that we came up with during our conversation. Think about it this way. You will go to a gasoline station, and let's say that the gasoline is 20 cents higher, and across the street it's 20% lower, or maybe down the street just a little bit. And we tend to say, you know what, we'll go down the street to save 20 cents a gallon. Now, what's the difference? Same gas, right? So I've even been in those situations where they've actually had the same brand of gasoline, and they were less than a quarter mile from one another, and one was 20 cents a gallon less. So, same outcome, you fill your tank, but different outcome is you have more money in your pocket, right? And that's what we were talking about on this call. You can take that money and redeploy it to something else. Could be wealth creation. It could be investment back into the business. It could be in all kinds of things. So if you're looking at your tax return in the rear view mirror every year, you aren't planning, you're reporting. And that's what I want you to please get across. As Peter showed us today, a single structural shift can be the difference between a stagnant bottom line and an extra $500,000 in reinvestment capital. Actually, for the guy doing 5 million, I mean, it was an extra $700,000 just by shifting the structure. Now, that money belongs in your business or your personal wealth, as far as I'm concerned. So either your business or your personal wealth, and if you want to give it away to the government, that's okay. But for most of us, we don't look at it that way. What could you do with an extra $700,000 that's right back into your pocket, right back into your bank account? And so that's why we do what we do, right? We look at how do we increase your revenues, your margin, your EBITDA in your business? How do we create more operational cash flow, after tax cash flow? How do we improve your valuation if you want to sell your business down the line, or go out and get more funding, right? That's what we look for. And that's exactly why I offer our CEO's sales strategy diagnostic. And that diagnostic is a deep in look to all of the areas of your business of how the money flows across your customer journey. And we find the money. So we look for the money in versus the money out. The math dictates the story. The story actually can dictate your actual freedom. If you're someone who's interested in talking about that, we usually find between 15 and 25% of revenue and profit that's currently leaking out of your business. If that's somebody that you yourself would like to have a conversation, reach out to me at doug@ceosalesstrategies.com, and we'll find that hidden cash. We'll do a first 15-minute call. I'll determine whether or not you have hidden cash sitting there. And if so, then we can talk about how do you want to go get it? And you can put it back to work in your life, in your business. Well, that's it for the CEO Sales Strategies today. If you love this episode, please give it a 5-star review. I'm Doug C. Brown. I'm going to say, well, now let's go get your money back into your success.